Hey guys, welcome back to Jack and the Top Stock. Now today we're going to talk about fitness. From personal experience, in the past year I've been really lazy. When I stay at home, I pretty much just eat and watch Netflix. And also because no one really sees how I look, I have no idea what's happening with my body. And on the Zoom calls, you're pretty much just showing above your chest, right? So everything happening on your belly and it's just too much. I don't want to talk about it. So today we're going to talk about some fitness stocks that are really good for your portfolio. Number one, PTON on NASDAQ is Peloton. Peloton is priced at around $110 per share and the market cap is $33 billion. The peak was back in December when it was over $150 per share, but it was traded only around $30 before the pandemic, so it really benefited from the pandemic shift. It was founded in 2012, but it went public in September 2019. On the revenue side, it's got three main business segments: connected fitness product, subscriptions, and other products. For the fitness product, obviously they've got the bikes and treadmills, and that brings in over 80% of the total revenue. And then on the subscription side, it's got really high margins, but the monthly revenue isn't as high, obviously, as the $4,000, $3,000 equipment. For the other products, it's got apparel and accessories that go along with the main products that they have. Back in December 2020, they acquired Precor, which is a leading commercial fitness manufacturer, and we've seen that a lot in the gyms that we go to. And it gave Peloton a great deal of manufacturing capability, especially in the US. Some of the missteps though, for Christmas, they had an advert where the husband gifted a Peloton for his wife as a surprise. At first she didn't love it, but then she fell in love after she saw the result. I think people felt uncomfortable because it seemed like the husband was fat shaming his wife a little bit, but telling her, you know what, you have to start moving because something is not going right. I think if the wife was initially quite excited about fitness as a whole, and maybe she didn't have time or she didn't find the right opportunities, that could have worked better. So, better luck next time on your advertising. The biggest misstep though, the biggest controversy was back in March 2021 when they recalled all the treadmills. So it was around 125,000 units. The reason was because there was a death of a child and there were many severe injuries brought on by the treadmill. And at first, they fought the warning from the U.S. Consumer Product Safety Commission that warned the customers about the dangers of this treadmill, but later reversed their decision because I guess it was just way too obvious that there was something wrong. Now, my opinion is that Peloton, the product and the service, is great for people that already pay a lot for their fitness classes or spin classes. But for me, who pays $5 every 2 weeks for my gym membership, this is not really within my price expectations. So people do pay a premium for the brand, and you know what? People love it because some people just don't get excited about exercising unless they're investing or they're part of an exciting brand. So this is a great product for them. And there are live classes, right, that go with the Peloton products. And this was especially important during the pandemic where a lot of the fitness classes were closed. And the growth opportunity here is they can build an ecosystem that really traps the consumer. Because a lot of the lifestyle brands come and go, but if they have really compelling value in the long term, I think customers will stick around and the stock will go up even further. Next, let's look at LULU on NASDAQ. It's Lululemon. Lululemon is priced right now around $330 per share. It's $43 billion market cap. It was founded in 1998 here in Vancouver, Canada. In July 2007, it went public. The business, again, similar to Peloton, and it's a lifestyle brand. It's got a bunch of yoga and exercise apparel and accessories, and it's best known worldwide for its world famous yoga pants that just fits really well and performs really well when you're doing those exercises. So the product's very functional and comfortable, but also convey a sense of fashion and taste, and is really well liked from the more affluent crowd where they can afford $100 yoga pants on a regular basis. In July 2020, they acquired a company called Mirror. So Mirror manufactures a product that looks basically like a mirror, but it also plays videos within it. So when you're working out, you're watching the mirror and it shows you all these moves and you can follow along. And what's really great about this product is you see exactly where you are compared to the instructor, so that you can finesse your movements, right? During 2020, what's different about this company compared to other retailers is that they actually added more retail locations compared to prior year, where most of the other retailers quickly shut down their stores because obviously people weren't going into the stores, right? So when we're looking at Lululemon, they really benefited from the trend of work from home because people started trading in their suits and their work outfits for more comfortable but still professional, well-fitted apparel that's from Lululemon. But the prices though, the prices are often double of what Nike or Adidas has. But people really love their product because they have higher commitment overall to customer satisfaction through quality and service. And a lot of people are saying that their products last a lot longer, so that they don't have to spend as much in the long term because they just reuse the product over and over again in a very long period of time. And the stores themselves act like hubs for the community because they hold a lot of classes and they have instructors and experts there to connect with their customers. Their main growth areas coming up is expanding to menswear, I think. Men wasn't a huge focus at first, but now it's pretty popular. And also fitness tech, as we discussed already. With Mirror, there could be more in the lineups coming out for Lululemon. Last is PLNT, traded on the New York Stock Exchange. It's Planet Fitness. The price is around $80 per share, market cap around $7 billion. So it's got a franchisee model for this fitness chain where people pay money for the brand and know-how of operating a fitness location, and they get the marketing help and the branded workout equipment, and in return the franchisees pay a cut of their membership revenue. So it's got over 2,000 stores under its brand across US, Canada, Australia, and Mexico, but only 100 stores are corporate owned, so majority of the stores are franchisee owned. 97% of the franchisee locations are owned by franchisees that have at least 3 locations. So these franchisees got multiple locations that they run, most of them at least. The standard membership is only $10 per month, so it's at a very entry level, and it's very accessible for the mass market. It's even got a judgment-free zone where they welcome people from all types of lifestyles to come in and become healthier, and so it's not just catering to the fitness buffs. So I actually, like I mentioned before, I actually participate in a gym like this. I only pay $5 every 2 weeks, and I really like it because it's worth every penny, literally. There aren't many pennies within $5. So, people are just everyday folks that want to exercise and to get in shape. It's not pushy, no one's really pretentious. But on the downside is that what you get is bare bones equipment. You're not gonna find, for example, Pelotons at these gyms. If you're really technical about your workout, like CrossFit, things like that, maybe you have to invest more into a specialty gym. So at the end of the day, reopening is a big part of their growth strategy. Once we all get back to the gyms, I think they will go back to where they were before, and even more, because the pandemic has made people realize that it's really important to stay healthy. So we're gonna see more of their locations. Also, due to the retail store closures, more real estate opportunities are opening up, so they can step in and take over those spaces as well. At the same time, they're investing in digital content like many of the other companies that we spoke about, because that's an overarching trend in the fitness world. So I think once it's all safe to go out, we're gonna be in the gyms, because once we get into those clothes that we used to wear before, we realize that something's gotta change and we really need to start getting back in shape. So that's all for today. Thank you for watching. See you guys next time.